and I wish you the best of luck. In any case, for the rest of you, I wish that you can spend some time with the family, enjoy a bit, um, some time off, and not everything is about money. So it's important to treasure those that you love. By the way, guys, as you know, if you do enjoy the content, please consider dropping that like and subscribe. It's the only thing that I ask, and I do hope that you keep coming to the channel. You keep supporting. I see Manuel is already here. Hello, Manuel. Thank you very much for joining. And I know that this was a bit of a surprise stream, if you will, but I think that a lot of things have happened in the past few weeks, so it would be important to actually go through some of them, including some of the predictions that were made and basically where we stand today. Does it make sense? Does it doesn't make sense? It's actually quite funny that today we've seen some videos from both Harry Dent and Peter Schiff, both of them completely wrong in their own way. I mean, Harry Dent is even worse because he's been advising to short stocks and basically go all in TLT, which is down something like 53% from its all-time highs. It's back to 2006 price, which makes a lot of sense since rates are back to 2006, 2007 levels. So the price of the bonds is back to that level. And what did we have this week? This week we had an overperformance in terms of jobs. Now, there's something important here to clarify. Are these job reports very good because actually the economy is very strong, or because costs are so high that people need to get second jobs? I don't know. There seems to be the data in terms of people with more than one job seems to point that a lot of people have two jobs, but that's not the point. The point is that the market considers very good jobs reports as, okay, higher jobs, higher inflation, higher rates, lower bonds, lower commodities, lower stocks, etc. However, you may have recalled that what I've said, and people were already jumping, when we had this sell-off, people were already jumping, oh my God, that's it, we're going to collapse again, the end is here. I said, no, we are just in a sideways channel. We typically are between 4,300, 4,500. Sometimes we go to the extreme on the upside, which is 4,600. We can go a bit above, a bit below. And sometimes we go to the channel on the downside, which is 4,200, 4,250, which is the extreme. It's not common, but sometimes we go there. And guess what? Once again, we approach 4,200, we jump right back. And today's reversal is very important because it pretty much seems to be putting a bottom in the stock market for this correction. Now, it's still to be seen. I mean, if inflation numbers next week come completely terrible, I'm talking like completely way above expectations, of course, that can derail the markets. But even if it comes a bit hotter than expected, I wouldn't be expecting it to derail the markets too much. I do think we're going to go back to probably the 4,400, 4,450, but I think we will. It will take time to get there, and it will. Oh, sorry guys about this. It will probably go a bit side. I think it will narrow the channel once again. Of course, gold is also a bit up. Bitcoin, last time I see it, was above 28,000, which is what you want to see. You want to start seeing some movements to the upside on the crypto market, which we are seeing right now. Just FYI, because this is important. Typically, in a recovery year, quarter four, Bitcoin outperforms Ethereum. Does that mean that's going to happen this time around? No, but it's important to note that this tends to be a reality, and the closer we approach the halving, basically, the more likely it is that we're going to see the bull market kickstart and the bottom is really in, and we're not going to see a double bottom. Now let's go back to something that I discussed yesterday in one of my videos, but I think I'm having this issue of being shadow banned once again, so I need to wait for a few days until this thing naturally gets over. But in any case, look, as you know, I don't charge for anything. I don't have paid groups, I don't have Patreons, I don't have private courses, I don't have any of that. So let's go back to some of the predictions that I made here, okay? Because, and the reason why I don't make that many of them is because the more you make it, so if I would make it on a daily basis, I would just be slammed all the time, because half of the time I'd be right, half of the time I'd be wrong, and very quickly it would seem very obvious that I'm just, throwing darts at the wall. Okay? So back in June, I said we should see gold 1850. I did say by the end of July, I meant by the end of August. I was wrong by the end of August in any case, but it was 1850 by the end of September. Now, contrast that with predictions made by Peter Schiff. Gold was at 2,000 something when I made that prediction. And Peter Schiff was telling everybody to buy gold, buy gold, buy gold, buy gold. And basically saying, oh my God, this is going to go above 3,000 very quickly. This is going to go to $3,000, blah, blah, blah. All of this, right? Who was right? Well, I was not right, but I was way more right than him. Other predictions. Oil prices. Oh my God, oil price is going to go to $100. Check the Financial Times a few weeks ago. Hedge funds make bets of oil above $100. I said, according to my cycle analysis, we actually should be topping on oil. When I say topping, I'm not saying topping for all time. I'm saying topping, a meaningful top for a few months, around the end of September, beginning of October. 27 September, crude oil hits $94, sells off, and it's now at 82, 83. I did say in June, no recession. Why? Because everybody was predicting a recession. Said no recession as long as everybody is convinced that it's going to happen. Now I'm starting to get concerned because the Fed, Goldman Sachs, CNBC are starting to say, oh my God, we're actually going to have a soft landing and there's not going to be any recession. Now I'm starting to get concerned because these people are now guaranteeing or saying that most likely we're not going to have a recession. Now it has become more likely that we're going to have one. Then everybody was expecting, oh my God, there's going to be big sell-offs because of banks going bankrupt, because of commercial real estate, all of that. I said, no, everybody's looking at those things. So if you're going to see sell-offs, it's going to come from China and or coming from investments that people consider safe, like government debt. Guess what is being pushing stocks down? Yield spiking on government debt, and basically bonds, government bonds, going down. Other one, what did I say about rates? Everybody was pricing in, oh yeah, by Q4, they're going to cut rates. And no, they are trying to increase rates, keep them up. And I said, higher for longer. And I was laughing because about 3 weeks ago, I saw a title on CNBC, stocks go down as traders price in higher for longer. And I said, this is exactly my expression. The difference is these clowns were all predicting this never to happen, number one, and we should be seeing a lot of sell-offs and all of these things by now, and basically rates being cut and all of that. Said, no, you're not going to see it unless something really breaks. And this is the point. The reason why I said that this sideways would take a bit of time to resolve is this sideways on the stock market is because as we are approaching the higher side of stocks and we are approaching the new all-time highs, people think, okay, but are things really better than in the past where we did have the all-time highs? And the reason, and basically the answer is no. So what ends up happening is that there's a lot of suspicion around the stock market hitting new all-time highs. I did expect Russell 2000 to underperform the other indices, which has been happening. Reason being higher rates, lower bonds, more fear in the banks, more fear in the small banks. Small banks are in the Russell, so the Russell should underperform the market. I thought Nasdaq would outperform it because it has companies that, even with higher rates, have very strong profitability. But most importantly, they're highly connected to AI, to artificial intelligence. So we're going to start to see some movements on that frontier. Exactly what happened. And if you look at the crypto cycle, if you look at 2019, actually, if you look at 2015, 2019, 2023, take out the prices, take out the dates, they look mirror image of each other. It's amazing. It's the reality. That's the point. So far, we've been seeing the same repetition of the cycle on the crypto side as expected, and there has been very little change. Other prediction that I made for my friends in the meme stock space, I said AMC is going to go down, reverse stock split is going to happen, dilution is going to happen, and this stock will collapse. Guess what? Exactly what happened. Dilution, reverse stock split happened, collapse, all of this happened. What I said now was, can AMC have a big run? Yes, it can. Q3 will be extremely important, which I think the results come sometime in November, because Adam Aron has said that they've been having the best months in the history of the company. So the question stays, okay, if you're having the best months in the history of the company, if you don't produce extremely good results, the question becomes, okay, but then what needs to happen in order for this company to improve substantially on anything? Unfortunately for the apes, he has now the right, this dilution that you've seen, I think this $325 million raised, is just a little taste of what is to come. He has many more shares to sell now. So if things start to go sour, either macroeconomically, either with the company itself, dilution will follow, unfortunately. Now, am I telling you to buy or sell the stock? No, you should have known by now. You do whatever you want to do. The issue is that I've seen the stock moving higher today, and once again, the videos of the YouTubers have come in full force. And this was to be expected, and I've warned about this as well, which is as soon as you start to see some big moves on AMC, because their market cap is now so low, that it's so easy to move it, that you're going to start to see the MOAS videos again, the shorts are covering, whatever. The bond market is now going to cost the MOAS. The SEC is finally tackling the short sellers of AMC, blah, blah, blah. All of these things, all of these videos will pop up. And here we are today. Now, what I wanted to say, am I just boasting and basically telling everybody how smart I am, that I predicted many of these things correctly? No. The question is, I did it all for free. And many of these experts, many of these financial gurus on YouTube, but also outside YouTube, that charge you money for a lot of things, were on the opposite side of my opinion. They were completely wrong. I was completely right. You check Steven Van Meter, thousands of followers, millions of views. He has been shouting at you to buy bonds since 2020, which was the top for bonds. Same goes for Harry Dent. Same story. Peter Schiff, another one. According to him, gold should already be $30,000 or something. And of course, what did he do today? He told people to go to Schiff Gold and buy his gold again. Why? Because if gold goes down, it's an excellent buying opportunity according to him. But if gold goes up, hurry up and buy it before it goes up further. So you see, doesn't matter. The solution is always the same. You go to his company, you give him your money, and if things go as he predicts, fine. If things don't go as he predicts, well, you already got your money. See, that's the most important part, that he already has your money, and you end up struggling. Not him. He's always doing very well because he will make money regardless of the gold stocks moving in the right direction, of gold itself moving in the right direction. He always has an excuse for you to buy his funds, to buy what he's selling. So he makes passive income out of you. Then he also has the ad revenue, sponsors, whatever, but you don't. That's the key. He has put his credibility on the line, saying that crypto has peaked, crypto has had the top, the bubble is finished, and now crypto is slowly going to go to zero, blah, blah, blah. This is what Peter Schiff said. So when next year or the year after we start hitting all new all-time highs, I want to see what he's going to say. He will probably just predict the same thing, that the world is ending tomorrow, and he will keep on doing this all across the cycle. And this is what he does. And unfortunately, it's not just him. Thousands of other people on YouTube are starting to do the same. Now, one of the good things is that XRP seems to be keeping on winning against the SEC. As I've mentioned many times before, the SEC, in my opinion, is the enemy of crypto. So I don't care if you like the community A, community B. I think when it comes to fighting the SEC, we should all be on the same page, because we are here to make the world better. Crypto is one of the few ways that actually makes money better than what we have. And of course, these clowns have been wrong on everything. They loved FTX and Sam Bankman-Friedman. During the financial crisis, what were they doing? Applying for jobs in the banks that they were supposed to regulate, etc., etc. So these guys are not your friends. And the worst part is that their actions on the long term will impact much more the US and American citizens rather than the rest of the world. We've been seeing a lot of innovation coming from Japan, from the UAE, from Singapore, even from the UK and certain parts of Europe. So, and Hong Kong is now well controlled by China and very much in favor of crypto. So my point is that it will just shift innovation to other parts of the globe. By the way, guys, if you do have a question or something for me, feel free to drop it. In any case, drop that like and subscribe, as it greatly helps the channel. So that is the only grift that I make. And so I do hope the SEC just keeps on losing all these cases. Also because now they have hundreds of coins that they've been targeting, but the more they lose on court, the less relevant the fact that they have those coins targeted, the less and less relevant it becomes, which is good for all of us. Now, when it comes to bonds, and this is important, bonds will move ultimately all the other markets. So I still expect new all-time highs on the S&P, Nasdaq 100, and Dow Jones. Russell less likely by Q1 2024. But of course, if bonds keep on selling off, eventually something will need to be done. Now, you see, this is where people sometimes get this very confused, right? And it's about this. As the US has been increasing debt brutally, not just the US, the West in general, what that means is if we would leave interest rates alone, they would spike. They would keep on going up. They would, just the same way, if you go to a bank and you make an X amount of money and you are increasing debt over and over again above the money that you get, the bank will raise your interest. Very simple. Now, if we leave bonds to their own devices, that's exactly what's going to happen. So it's just a matter of time before the Fed will need to jump in and start cutting rates. Now, I'm not sure how they're going to do it, what's going to be the excuse they're going to use it, but they will eventually need to do it. The issue with people like the ones that I've mentioned before is that they think that these things happen in like a week or a month or 2 months or whatever. No, these things can take a few years to play out. So I do expect some fireworks, but maybe more around 2025 or so, at the end of 2025. I don't think 2023, 2024, I don't think anything's going to happen. First of all, because you have elections in the US, and I don't recall any year where the markets were down with a US election at the same time. So, I mean, okay, maybe it happens this time around, but I don't think so. I think that the next big sell-off, the next big thing, you need everybody convinced that everything is fine and that there's no issues and the economy has never been stronger, blah, blah, blah. So you need that kind of environment, that kind of belief in order to really see some things go down. Now, as I mentioned, we are approaching the Bitcoin halving, which means the Bitcoin tends to dominate the last cycle between quarter before the quarter of the halving, and then you have a little bit of altcoin season and Ethereum season. So it will be interesting to see some price action. I do think some of the projects, even the altcoins ones, may have bottomed. I think Pulse Access may have bottomed, and so I'm starting to get really excited for it. I still continue to DCA as much as possible, and I will be adding up my current cost averages, and I will update them. As you know, I've been talking about certain cryptos for a long time before they are famous and before they all the people love them, right? Because then it becomes extremely easy. Now, one thing that is also good to note is that the number of crypto channels is increasing, most of them with garbage information, most of them with clickbait, like these next 10 coins will 10x in 10 days, things like this. Be careful because this will multiply very aggressively, particularly as we move on with the cycle. Be trained. Understand that these people are here with the sole goal of trying to create a following in order to convince people to give them money. They will probably predict 1,000 coins are going to go up. The point of it is very simple, is that eventually they will get one so they can speak about it for hours and days and days and days and give the impression that they are geniuses, and that way convince you to give them all their money, all your money. That's the end goal. In any case, for the ones that have been following me for a long time, I do think I've been actually quite accurate in the predictions that I made. I don't make many of them because the more you make them, the more you risk looking like a fool. I only make certain predictions that I feel very comfortable, and so far, you guys can be the judges, but I do believe it has been pretty accurate. And guys, that's about it for today. I hope that you enjoy. I hope you drop that like and subscribe once you watch it a bit later. I know that I did come a bit out of nowhere for this live stream, but there were a few things happening in the markets, and I do think we put in the bottom for the stock market now. And the job report, I think it was very important because at some point we were negative 1.5% or so, and we reversed all of that, and we actually ended up plus 1.5% or so. Of course, at the same time, Meet Kevin was predicting Black Monday next week. I mean, it is what it is, right? So these guys keep getting it always wrong, but that's the world of YouTube. They get rewarded for it. If you guys have a few questions before I leave, drop them in the chat. Otherwise, guys, when you see this, please like and subscribe. And if you do have some questions that you'd like me to address in other videos, just drop it later, and I will try to make videos addressing those. By the way, next week, Monday, Tuesday, I'm on business trip. Probably I won't post anything, or maybe one video within 2 days, but that's going to be about it. So guys, if there's no questions, I will then end up live stream for today. Thank you very much for joining, guys. I just wanted to give a quick update. I think this week was very important. Pay attention for the inflation numbers next week. We may go a bit higher, which is normal. No market, including inflation, goes down on the straight line every single month. There's always some up and down before we continue a trend. So yeah, pay attention to that release date. Unless, I think, in my opinion, unless we really unless it really comes a lot hotter than expected, I do think inflation will not have that big of a deal in the stock market. And of course, if it comes way better than expected, it will have, I think, positive effect. But it's a little bit like with the cough that went around 2020, or other big, economic events of the past years. The more and more you talk about it and gets reported, blah, 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 the less impact in the stocks it has, unless it's something really dramatic. So, no, thanks a lot, Manuel, for your comment. Thank you for being here the whole time. As I mentioned, if you can drop that like and subscribe, is very good. If you do have any other questions for me, just drop them in the chat. I'll give another couple of minutes before I leave. So thank you very much, guys. And I think I will catch you in the next one. Try to enjoy a bit the weekend, enjoy with your loved ones, and try to tune out a little bit of the market. I think on Sunday, I'll do a video a bit more macro, in the sense of, the QE lead to inflation? Is the Fed ultimately wrong in that assessment? So it will be a bit more of a macro trend, which is very important. Like, we should know where the markets ultimately, or the world ultimately, is leading into. That doesn't mean that we should go and just try to trade off of it, but it's important to understand where we're moving, and the cycles around us. And most importantly, don't listen to these clowns like Harry Dent and Peter Schiff on YouTube, because they've been wrong for 20 years. They'll keep being wrong for 20 years. And this is how, unfortunately, they get paid. The more outrageous, dangerous, end of the world they sound, the better. So guys, thank you very much for your support. As I mentioned, once again, drop that like and subscribe. I'll catch you in the next one. Drop a few comments if you'd like me to address something. So thank you, guys, and I'll see you in the next one. Hey, Alex. Yeah, no worries. Just look it back, man. And if you do have a few questions, just drop it, and I'll try to answer. I'll just try to answer. Either I make a video around any questions you may have. But in any case, I did go through a few of the predictions that I made for this year, and the results so far, and the fact that I give all of this juicy, nice information for free. One of my favorite things that I tend to look at, and I will end on this, is Metcalfe's law. So according to Metcalfe's law, if your user base on your network goes up tenfold, price goes up 10 squared, meaning 100-fold. So that's one of my favorite, and it works many times. Worked with Bitcoin, Ethereum, Cardano, Shiba Inu, you name it. So that's a little thing to always keep attention, because you can see some of these things in the Etherscan, etc. In any case, guys, approach half an hour. Have a nice one. Enjoy some time with your family. It's a pleasure to be here, and I'll catch you in the next one.